Good morning. How are we all doing? Morning, Church, Paul, Franco, Virginia, Evil Baggy, Callum, Odshich, Neo, Gregors, Peter, JC, Michael, Steve. How are we all doing? It's Wednesday, non-farm employment day. Should be some impact today. Hopefully, US dollar might move for the first time in a while. Well, actually go somewhere anyway. So, big day potentially today. We've got services PMIs, got FOMC this evening, and unemployment claims this afternoon. So plenty of news today. I've just got out of a yen position this morning. Again, I'm regretting getting in this. I don't know why I bother. I'm not learning any lessons, unfortunately. Can't believe they're not doing anything on this at all in any way, shape or form. The Japanese are just rolling over and are going to go bankrupt. They're printing lots of new notes. All they've been talking about this morning is, hey, everybody, look at our new bank notes we're printing. Yeah. How about doing something about your currency collapsing or your country going into a never-ending spiral of debt? Not interested. I just got out of that this morning from there. So that's the second drawdown control on it. Average is within propulsion, so I'm happy with my average, just not getting any weakness in the US dollar or strength in the yen at the moment. So hopefully today we might get some negative service PMI numbers and unemployment claims might go up, and FOMC meeting minutes might come out and say, do you know what, we're going to drop the interest rate this year. You never know what's going to happen, but anyway, that's what I want. That's today's news. Quite a lot going on today. Lagarde speaking again this afternoon. If you have a look at last night's news, we had mixed messages again from the ECB. So last night, I never know how to say this one's name. Macloof, I think it is. 2 cuts is probably going a little too far, but I wouldn't rule it out. So we've got ECB members basically saying there's definitely going to be 2 cuts, potentially a third at the end of the year. And now we've got one saying actually 2 is probably a bit too much. We'll probably just do 1. So that is your forecast for rate cuts on the ECB some point this year. Helpful. So we have no idea what the ECB is going to do. So Lagarde basically is talking today. Again, but she has been talking every day this week anyway, so I don't think we're going to get anything new today on that. So confusion reigns with the ECB again. Fed basically saying the Fed are always arguing about what's going to go on. It's very, very mixed messages from all the central banks at the moment. Bank of Japan, they're just going on about they're going to keep printing money if as long as people want it. We've got some new banknotes out. Look how shiny they are. They're not worth anything, but anyway, here you go. Aussies came out with some news this morning. Retail sales, which were positive, quite positive. But not a lot of movement on the Aussies. As you can see, we've had nothing on the ADRs today. So if you look at all the Aussie pairs, ever such a slight uptick on the Australian dollar, but nothing particularly exciting, just rallied into yesterday's high on the Aussie New Zealand. No movement really today on anything at all. So ADRs, we're completely flat on. Weekly ranges, nothing's been hit. It is midweek, but we've got nothing. We've got no movement, as you can see from this Aussie US chart. We're not going anywhere at the moment. So everything is sort of stuck again in the middle of nowhere. Bit of a push up on the Aussie New Zealand, as I say, into yesterday's high. Propulsion gap target to the downside there. There's a couple of targets to the downside. So we'll have a look through all the pairs this morning and see what's going on, but nothing particularly exciting. Goldman Sachs says they expect rate cut in September. What's that on the ECB? Where are we? June, July. Yeah, it's either going to be August or September. It's difficult to tell. As I say, this morning or yesterday evening's news there kind of confirms that they don't really know. Lagarde has always said there was going to be 3. And it was going to be one drop, one miss, one drop, one miss, one drop. But unsure. They're unsure. Their inflation has bounced. We're on 2.6. We bounced by 0.2. So they haven't quite got where they wanted to be with the interest rates. We have. And this is the weird thing. We haven't dropped our rates. I don't know what's going on in central banks at the moment. They don't think they know. I think there's a lot of politics going on at the minute. A lot of influence from politics. So speaking of politics, tomorrow is the elections in the UK. So we will have exit poll information tomorrow, which will give us an indication towards the end of the day what the likely outcome is going to be. But we're not really going to know properly tomorrow. So, this is going to potentially have a large impact on the pound tomorrow. So you have to be a little bit careful. We've got Swiss CPI coming out as well tomorrow. That's actually likely to send the Swiss into complete chaos. But tomorrow, if you've got any pound exposure on, I haven't got an awful lot of pound myself. But if you have got pound exposure on, it's worth either protecting it or taking it, basically. We know who's going to win, yeah. But, knowing who's going to win doesn't tell you what impact it's going to have on the financial markets. So this is the unknown. If you look at previous elections and what happened in the FX markets, we've had 300 ADR days. Quite why, I'm not 100% sure on exactly why they affect the FX markets quite so much, because monetary policy is dictated by the Bank of England, and spending obviously is done by the government. So, and as we know from the Liz Truss debacle, if you look at when Liz Truss crashed the economy back here, the Bank of England immediately bailed her out. So, that's the sort of movement you get when governments say stupid things and decide stupid policies, but then it takes the Bank of England to go, you're stupid, don't do that, do this, and then you get sacked. So just got to be a bit careful. We could have a big day over the next couple of days, depending on what's said. But new governments come with new ministers of finance, but that's to do with spending, and obviously spending does have an impact on the currency itself. But they've published all their manifestos, what they're going to do and how they're going to pay for everything. So in theory, we know what they're going to do. So therefore, the market should already be moving on that, and it's not. This is the weird thing. On the election days and the days after the election days, you get these big, crazy moves. We already know. It's like interest rates. If the ECB come out and say, we're going to drop rates in September, we know that on the way to September, the ECB is going to do that and the euro is going to drop because the market knows what's coming, so it factors that in. The market knows what they're going to do with prices when they get in, what they're going to do with spending when they get in, so surely we should have a move before it. We don't. So it doesn't work the same way with elections for some reason. I don't know why, but I don't think the banks and institutions care too much about it. So we will see anyway. So that's coming up. So we need to be aware of that. Maybe everyone is just waiting. Indecision is the sentiment now. Yeah, indecision is definitely the sentiment now, as you can see. But that's not any different to everywhere. Look, everything is just stuck. Look, I'm flicking through all these charts. They all look the same, apart from Aussie, New Zealand. But, everything kind of looks the same at the moment. It's sideways. If it's not the Swiss and it's not the yen, it's sideways. Yeah, it's just sideways. It has been for a week or two now. Yeah, we're in a very contracted market again. It's terrible. These trading conditions this year are the worst I've ever experienced, ever. The market is just moving completely differently to normal this year. But you get that. You get periods where market conditions will change. Everything changes. Economies change, world events change, the way we do things changes. Stuff's changing. Markets change. You have to adapt to them. So you have to start looking at different ways to extract money from the current movement. The current movement is very contracted. I keep going back to this point that, you know, I was trading the pound New Zealand 5 years ago at an ADR of 450. We're currently trading at an ADR of 92, below 100. Yeah, this thing doesn't move 100 pips in a day. It used to move 450 pips in a day. Yeah, this is, in fact, that is the first, almost, pound yen saved it. Look. That is the first time I've ever seen every single Forex pair trading below a 100 ADR. Apart from the pound yen, which is trading at 105, everything is trading below 100 pips a day. It's just nothing moving, is there? It's very difficult to extract money. You need volatility. You need movement as a trader to make money. When stuff is just not going anywhere, it's very hard to extract cash. Yeah, the trend traders at the moment, if they're not trading the yen, are dead. All of them. They are all dead. None of them are making any money because you can't make money as a trend trader when the market isn't trending. Nothing's trending apart from the yen. And yeah, if you've managed to ride that, well done. But how many trend traders can hang on to a trade for weeks and weeks and weeks on end? You don't get paid to hold it. You got to get out. They're not getting out, are they? You can see they're not getting out because it come down. So yeah, just bizarre this year. Very bizarre. I'm hoping it's all going to change after summer. Something's got to change, isn't it? We'll see. Stagnation. Yeah. Stagnation, no movement. Indices this morning, bit erratic. I've got hedged on the FTSE. DAX is a break long, but not a break, as you can see. It's not actually broken anywhere. It's not gone anywhere. FTSE, I just got tapped in on spread. So they basically spread me into a long and then they've dropped it. So on a hedge on that one. Actually need to put targets on that while I'm here. Oh, fine. Targets to the downside are great. So targets to the downside will be yesterday's low. Happy with that. Upside targets, previous day's high. In fact, I'm just going to move that upside target down to ADR. So bear in mind today, we've got a lot of news. And obviously, US dollar news does affect the indices. That's well within ADR. That's a double monthly low as well. I think it's unlikely to get there. More likely to get up here. So just bear in mind today, obviously, there's going to be a fair amount of movement on the US, which means there's probably going to be a fair amount of movement on all indices as well. So that all kicks off at 1:15 this afternoon, 1:30 for unemployment claims. Then we've got the PMIs at the new half an hour after the New York Open. And then we've got FOMC this evening before the close. So you've got 4 basically US news announcements coming out today, all spread throughout the entire day. So there's going to be a lot of volatility during the day, which means we're probably not going to get much this morning. But we will see which way it goes. Can you look at CAD Swiss? Yeah. So Swiss franc is still on its backside. All Swiss pairs are. They're all the same. Yeah, I'll cover all the Swisses. Might as well cover them all now. They dropped the interest rates without telling us. Again, second time they've done it. And obviously, when they do that, it harms the Swiss franc. That was the first time they did it. And that's the second time they've done it. So the market structure is obviously going to be bullish against the Swissy. There's no reason why this shouldn't break that high and carry on. Whether or not it pulls back before it does that, a la that sort of move, we'll have to wait and see. But yeah, I mean, the Swiss have done their usual, not going to bother telling you what we're doing, and then we're just going to upset you because you all factored in the fact that we're not going to change interest rates and we decided to change them. Sorry, tough. Did you lose a load of money? Oh, well. So they'll sell the Swiss. So everything's rallying against the Swiss. There's no reason at the moment for the Swiss to power up in any way, shape or form. Tomorrow morning, we get the inflation figure, and the inflation figure is expected to have dropped by 0.2. If we get that, 0.1, or we get a 0, or worst case scenario, anything lower than that, they will drop interest rates again. So the market will devalue the Swiss again. Yeah. So tomorrow morning, if you're in deep on that Swiss, it could get a lot worse tomorrow. However, it could get a lot better. Yeah. If that number comes out at 0.3 or 0.4, they will freeze rates. Well, a normal country would freeze rates. This is the Swiss. So don't know. Yeah. I mean, they are below target, lowest inflation, coming down. So, their GDP is constantly going up. They're always doing well. They've got everybody's employed. This 2.3 unemployment, probably don't want to work anyway. So not a lot you can do with it, really. Scale out. If it's getting too squeezy and hurting too much, shut some. You will get a pullback of some description on it at some point. But, we talked yesterday about the Swiss franc and how the Swiss franc just is not a good mean reversion tool. A lot of my worst squeezes have been on Swiss franc pairs, US dollar Swiss specifically, because they do not tell us what they're doing. Yeah. Jordan, you look at the news, scheduled news. Yeah. And look at scheduled news for the Swiss franc. Yeah. Nobody knows. No one ever knows what's going on with the Swiss franc. Yeah, we know when they have a bank holiday. But there's no, you look at any other currency and you'll see talking heads all over the place. Yeah. Lagarde speaking. Obviously this scheduled speaks, but, Jordan never says anything. The Swiss National Bank does not say anything. So, it's one of those currencies where it will go into a squeeze because the market has to try and predict what they're doing and it gets it wrong. When the market gets it wrong, it has to exit the positions. And that's what news is basically. So movement in markets is basically predictions of news events. News events come out as expected. Excellent. News events don't come out as expected. Huge move or huge move, which is why we see these parabolic moves. This is the market expecting them to keep interest rates at 1.5. They didn't. They put it to 1.25. So the market had to escape its position that it was in, expecting a specific interest rate. So it has to balance its books. That's why you get market movement like this. When we get a CPI estimate come out 3.3% different to what it was, the market wasn't expecting it. So it has to either pile into or pile out of the position it's in, depending on which way it is, which is why you get these huge moves off of news. That's why we pay attention to this, because this is what moves the market, economics, fundamentals. So, but with the Swiss, it's in a squeeze, and it should be in a squeeze. Everything should be bullish against the Swissy. But, the market doesn't go in straight lines. This is why we have market structure. So you're waiting for them to scale out of some of that move. The Canadian dollar is also bearish at the moment. We've had the first interest rate drop on the Canadian dollar. So obviously it is bearish. So it's a case of you've got a bear currency against a bear currency, which typically gives you that. So this will get pushed around with the US dollar. So the best thing you can hope for on the CAD Swiss today, if you're short on it, is negative US news, because that will also bring the CAD down with it. All you need is a little bit of bullishness on the Swiss franc at the same time as that news comes out, and you could be easily down at a couple of hundred ADR. So, and this is why when we're trading, we always try to keep our average price within ADR. Yeah, so our average is always, we want to keep it within 150 ADR, because all you need is a good, strong, solid, above average daily movement in your direction, and you can escape your position. That's why we're averaging in, to keep our average within the average daily range so that we can exit. So if you're in CAD Swiss short and your ADR and your average is there, you can hit that easy. 150 ADR. Yeah. We can do that on a news event. We can do that just on a strong push into the Swiss. If your average is down here somewhere, you're going to need a good couple of days worth of movement, which is a lot more difficult to achieve, isn't it? So, but yeah, it's squeezing. All the Swissies are. So, this is why I've taken the Swiss out of my portfolio temporarily for the moment, because it is completely unpredictable. They are not giving us any information. And in normal trading conditions where you've got normal interest rate movement, it's not a problem. It's not normally an issue, is it? So when we're going through the interest rate rally after COVID, we knew everybody was going to put their interest rates up. So everybody was in the same boat. When we went through the interest rate freeze, it wasn't really a problem because there was no expectation to drop rates. Swiss went first, unexpectedly. And as soon as they did that, they upset the equilibrium of all the pairs, basically. So now all of a sudden, we've got somebody moving without telling us. And that's why I've taken it out of the portfolio, because it's proved me right. The second time, they did the same thing. They didn't tell us they were changing interest rates, and they did change interest rates. Yeah. So you're going to get erratic movement. Position trading is about scaling into market movement. Market movement needs to be full of market structure or ranges. If it's full of erratic moves that go parabolic for weeks on end, it's not going to work. Hence US dollar yen. Yeah, I mean, it's the same thing. I'm stuck in US dollar yen because this is not so much irrational. It's just more unbelievable that the Japanese are not doing anything about this. Yeah, they have the power to do something about this. I am completely bamboozled as to why they're not doing something about this, why they're letting their economy collapse, their businesses go bankrupt when they have the power to stop it happening. This is why I'm short, because it's well within their power. It's like, I've used this analogy before with the yen. It's like your mortgage going up and up and up and up and up and up and up, right? And it getting to the point where your income is lower than your mortgage payment, yet you have a 200 grand Bentley sitting on the drive. Sell the Bentley. Sort it out. Yeah? They're not selling the Bentley. They're holding overseas assets in US bonds worth trillions. Yeah? And this is how we get intervention moves like that and that. It's at a 38-year low. They can do that. They're not. They're not even talking about it anymore. So there's something fundamentally wrong with this, again, which is why I've removed it from my portfolio. Apart from this one, because I saw a glimmer of hope here, which was wrong. And I've had to pay the price for it twice now. I've taken a 3% loss on this so far. I'm sitting in 6% of drawdown on it. Nothing I can do. But, it will weaken, but we're waiting for some news on the yen, on the US. We need some negative news on the US to help this along. And I think once we get some negative news, you see my average, like I just said, my average is 150 ADR, sitting in the middle of that propulsion gap. If it gets there, I'm taking the lot off. Screw it. Yeah, I'll take a 3% loss because I cocked it up. Fair enough. But as a retracement value, what I'm looking for is literally just a flag break. All I want, just flag for a little bit. Don't care if you carry on going up, just give me a flag break. I don't even want to pull back, just a flag break. And you just get out. But yeah. Covering all the ends, might as well do them all while we're here. Aussie dollar yen, just about to hit ADR. There's your first ADR of the day, about to trigger in a second. Come on. Up we go. Oh, leave me hanging, why don't you? It is, isn't it? It's just going to sit there. Nope, I'm not going to hit ADR. I'm going to sit on ADR until you go somewhere else, and then I'll trigger it. They're watching, I tell you, they're watching. Right, Aussie yen. I'll go over to the CAD yen, then that will trigger. So CAD yen pushing up, Swiss pushing up. Even the Swiss is, look, even the Swiss franc, as weak as it is even stronger than the Japanese yen. Amazing. Euro yen, pound yen, US yen, New Zealand yen, all flying today. Although we have had a big order, there's a big bear order came in this morning. Look at all these other yens and how they've pushed. And then look at this. Just as I got out, obviously, we had a big sudden sell order coming on the US dollar yen. So I'm expecting that is probably just a profit take move from some bank or institution ahead of the US news that's coming out today. So I don't think that's anything to do with the yen. I think that was a US order, but we'll see. So yeah, all of these are obviously off their cut. There you go. US dollar yen ADR. So yeah, I mean, obviously there's a mean reversion opportunity there, but look what happened last time we got an ADR. Yeah, flag break. Yeah, there's no reason for a pullback on this because the Japanese can't do anything about it, it seems. So all the ends basically extended crazy. If you look at the RSIs, Aussie dollar yen, CAD yen, Euro yen, pound yen, US yen, all extended. Yeah, so big, strong moves on all of these. There's a couple of opportunities. So Swiss franc again extended. Yeah, so we got it's yen and Swiss, yen and Swiss, Swiss yen, Swiss yen, Swiss yen. There's no point in looking at anything else, is there? Nothing is moving apart from the Swiss and the yen. That's it. That's the only thing that we've got any movement on at the moment. So all the RSIs today, all exactly the same. Euro seems bullish this morning. Yeah. This I think it's probably to do with this talk that we've had over the last couple of days to do with the interest rates. So it is bearish overall. However, obviously the interest rates, we knew it was going to be a very slow drop on interest rates on the euro. They said that. But it seems to me like it might be even slower, which means that there will be less speed and urgency to start selling euro positions. So, which is good for us because it means you're less likely to get grindy squeezes and more likely to get nice market structure movement. So your sells will definitely be easier to get out of than your buys still, but yeah, so it's been a bit bullish, but nothing particularly exciting. Yeah, I mean, a couple of up days. Don't forget, we've also got the outcome of the parliamentary elections in France, which is going to impact the euro dramatically. They are moving massively right wing in all of Europe, and we are in the UK as well. So there's going to be changes coming, which is going to affect the eurozone in a whole, and it will affect its economy. So there's a lot of change happening at the moment. People underestimate the amount of impact COVID has had, I think, on world economics and everything. Yeah, the euro, basically the whole of Europe shut. Europe is made up predominantly of car exports and tourism. Yeah, we weren't buying new cars because we couldn't go out. No one had jobs, so you didn't need a car to get to work. We couldn't go on holiday, so we couldn't spend any money in euro. The euro collapsed completely. Then we had Brexit. And now we've got a right-wing government coming in for the first time in an awful long time, which is going to change the outlook on how they want to run things in Europe. So, everything is unpredictable at the best of times. At the moment, everything is ridiculously unpredictable. So as long as you have structure, you're fine. Yeah, as long as things move up and down regularly, you're fine. So as long as one economy does not come dramatically stronger than another, you will still have that type of movement. Banks and institutions, don't forget, still have to make money. When something moves in one direction, the only way they can put a P&L, a positive P&L figure on their books is to take profit on the order. So as they buy, they have to sell. The sell is the profit take. Or if you're selling, the buy is the profit take, which is why we get the structure like that in the market. Yeah. Buys and sells, making money. So as long as that continues, everything's fine. Direction-wise, that is the bit that's more tricky to predict. Short and long-term direction at the moment is a lot more difficult to predict than it has been for years and years and years. So, but overall, everything should be bearish euro. So, long-term, that is. Obviously, in a month, it can go up for an entire month. Yeah, look at any chart. Yeah, weekly and monthly movement. Yeah, you're going to get multiple down weeks, multiple up weeks where, stuff is going to move up and down an awful lot. But, that sort of thing there is where you get a change in interest rates. So 2023, we had the interest rate stagnation starting. And one was the last to stop increasing interest rates, US. So obviously that came down dramatically for a long time. But look, it always pulls back. Move, we profit take. And that is a good example there. COVID, yeah? Like I just said. I know, let's shut Europe so we can't have any tourism. What? But on the way down, you get structure. But, you can't, to position trade, nightmare. Nothing you can do. Cad Swiss mentioned a few weeks ago a very good long-term buy with a positive swap. Yeah, probably. Chuck's morning. Ryan, every time you get out, it drops. Yeah, I know. It's like clockwork. Literally, when I press that close button, that happens. It's like clockwork. It really is. I was looking at this morning. I thought, shall I shut that before the live stream, or shall I wait for the live stream and do the analysis on the US dollar yen and then close the position out? Because I knew I was going to close one. I had to do some drawdown control on it. And I thought, I'll do it before the live stream so I can show why I got out. Literally, I mean, if you look at where I closed it, yeah, you can't make it up, right? There's my close, that candle there. Literally, since my close, there hasn't been a bull candle. It literally went, Lee shut his order. Boom. It's like I keep saying, there's a conspiracy theory. I've got two, I keep looking up in these corners of my room because I've got a VR headset in here, right? And I've got two VR sensors in the corners. I reckon they've tapped into them as cameras. And they're watching. There's that one over there is watching over my shoulder and he goes, he's closed it, sell it. You mentioned it's always good to make sure the average price is within one ADR. How do you do this without over leveraging? Just by scaling in. So just scaling into positions as usual. What's over leveraging, Harold? Watch the bootcamp. So you scale in, you adjust your price, you keep your average as close as you can. If it gets too hot, you scale out, which brings your average even closer. It's drawdown control. So you just use position sizing and drawdown control to adjust the size of the position and adjust the level of the position. Everything is taught in the bootcamp, basically. Over leveraging is starting your positions too big. That's why we trade small. Yeah, 0.25 to 0.5 is your initial position over one ADR. Yeah. Has anyone else lost sound? No, my sound's working this end. So if you get in with that sort of risk over one ADR, yeah. So you're risking 0.25% or 0.5% of your account over one ADR of movement. When it's come down by one ADR, the worst case scenario is you are in 0.25 to 0.5% of drawdown, which allows you time to add more position size, and keep that price moving against you. So you're basically waiting for banks and institutions to take profit. Yeah? You don't know when they're going to take profit because there's no indicator that predicts the future. So we are waiting. We're buying ourselves time by scaling in and moving price to wait for them to do the move because we don't know when the move's coming, which is why all systems and strategies out there fail all the time because they're trying to predict where price is going to change direction. You can't do that because unless you've got a crystal ball, you don't know what's coming. So the only thing you've got is risk and scaling in and time. That's why we use the sizing we do. Bank of Japan will make move on volatility, not price. 10% move. obviously Beg Les knows exactly what's happening. He's got to tap into the Bank of Japan because he knows what's going to happen. They will make a move on volatility, not a price, and it will be 10%. Excellent. Good one, Beg Les. Get on it then. Right, so I'm going to run through all the pairs. I've done Swiss, I've done yen, I've pretty much done euro. I mean, at the moment, euro basically shouldn't be too affected today. Obviously, US dollar will. The euro is bearish, as we know, because obviously interest rates have started to drop. The only currencies we haven't had drops on, obviously, at the moment are the Australian dollar, which is forecast potentially to go up, the pound, which is going to come down at some point, the New Zealand dollar, which is again forecast to potentially go up, and the US, which they've said they're not changing this year. So basically the euro starting this drop is bearish against pretty much everything out there. Obviously not the yen, not the Swiss, and not anything else that's changing currency rate, which is like the CAD. So in theory, you should be able to short pretty much any pop. And yes, you'll probably have to scale into some of them because obviously we don't know how far they're going to want to pull back on the moves on the way down. But I am short only euro at the moment. So I'm not taking any long positions on it. I am taking long positions on the euro pound and the euro US because the US is neutral and the US will move on news. So the US goes up and down, up and down, up and down all the time. So all the euros, basically, we're looking for bear entries. So like that one that I had this week. Yeah, so I got in yesterday, straight in, RSI extension, straight out. Sorry, that was on Monday I got into that one. So first entry Monday, second entry yesterday, out. So shorts, I'm looking for ADR hits to the upside. So if you're using the market reverse alerts or the position trader EA, shorts on ADR extensions, shorts on RSI extensions, just trying to get in to short positions on any pullbacks that we get. So euro odd specifically because the Australian dollar is going to remain neutral to strong because they're not dropping interest rates. So if we can get pullbacks on this, as you can see, I haven't had one this month at all. Haven't had any pullbacks. Be looking for entries. You can take propulsion gap entries as well. So if you wanted to get in on propulsion gaps, sure, do that. Euro CAD, same thing. Now the Canadian dollar has obviously dropped interest rates. So this is kind of a bear against a bear, which gives you much more of a range. But not a lot of movement on that one either at the moment. Euro Swiss we know about. The Euro Swiss is probably one of the trickiest ones to trade because they both move on the same news. So when you've got the euro getting some really bad news, the Swiss will obviously devalue slightly because it trades with the euro, and you tend to get a lot of movement. So just very tricky to trade any Swiss, isn't it? Euro pound. So this is the one that I'm trading in either direction because at the moment the euro is bearish. The pound is going to become bearish. So a bear against a bear, close trade partners. Absolutely no reason why we want our prices to be different. Yeah. So very, 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 very range bound pair. You get the odd push when you get a big change in news, but you know, there's no interest for this to be dramatically different in price. So sticking between the 80 to 90 range in price is what this does. So yeah, I can trade it in any direction really. It should go up and down very nicely. So a little bit like the US dollar CAD, taking any position. So there was a short entry there, straight in, straight out. There was a long entry there, straight in, straight out. So either way on euro pound, just waiting for extensions on RSI, waiting for extensions above ADR and below ADR or propulsion gap bounces. Euro New Zealand, same thing. This is a short. New Zealand dollar has been a lot weaker than the Aussie. Hence, we've obviously had a bit of a rally, but lovely rally though. So beautiful market structure on the way up. But obviously we should be coming down now. So we haven't got any news coming out on the New Zealand dollar short term. So next news for New Zealand is next week. Oh, we've got the interest rate. So 5.5. We're expecting a 5.5. They have indicated that they may need another one. So there is a possibility we could get a 5.75. I doubt it, but wouldn't put it past them. If you look at the New Zealanders' history with interest rate change, it's very, very, very rare. There's one there, yeah, but it's very, very rare that they don't do what they say they're going to do. But occasionally they need to, and they have this time round indicated that they may need to. So there is a possibility of getting that 5.75, which obviously will dramatically increase the power in the New Zealand dollar, which will make the euro New Zealand dollar be back down there next week. So, excuse me, so bear that in mind. So hence why I'm biased like that, looking for short opportunities. Although I'm not trading euro New Zealand, I'm trading Aussie New Zealand. Basically the same thing, same currency pretty much. Euro US, again, no problem taking this in either direction. So although we're bearish there, we are bullish, then we're bearish, then we're bullish, then we're bearish. The US has absolutely no idea where it's going. And as long as there's news, this will move up and down. So it doesn't really matter, as you can see. So it went long there, went short there, long there, long there, short there, long there, short there. Just keep taking them. Let the EA do its job. Just let it get in, scale in when needed, and get out. Very easy to trade at the moment. So those are all your euros. Covered them in a bit more detail. Canadian dollar is bearish. So CAD Swiss. Obviously, I have no point in covering those CADs because it's Swiss and yen. Aussie dollar CAD. We'll come back to those in a minute. Aussie dollar CAD. As you can see, very, 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 very sideways at the moment. So these are both strong commodity pairs, meaning they will both move on news about commodity, and they are usually quite tight-ranged pairs. So the fact that we've got potentially now an interest rate drop already happened on the Canadian, we don't know when the next Canadian drop is going to happen. And the Aussies basically potentially going to put up their interest rates if necessary. So the bias is more of a long than a short. But as you can see, the market really not doing an awful lot since we had the last interest rate news. So it doesn't seem to me that there is an awful lot of strength in the Aussie compared to the CAD at the moment. But if you wanted to take a bias, it would be that. So at the moment, I'm kind of trading it in both directions. I don't really care at the minute, unless something dramatic changes with that. And if the New Zealanders do increase their interest rates next week, you're going to get a pump in the Aussie, and that will indicate that the Aussies may well increase their interest rates. So that would be the time to try and get out of any shorts and then just flip long. But at the moment, can go anywhere. So again, RSI extensions, nice short there, nice short there, nice long there. Haven't had anything since. So trading either direction. Aussie, Swiss and yen I've covered. Aussie, New Zealand. So this one is the one that is rallying at the moment. As you can see, I got stuck in the squeeze. And again, like I said, or someone else just said, when I get out is when they do the move. So stuck in a squeeze on that one for a couple of months. Decided to cut it completely because I was waiting for them to pull back to that level there. They didn't do it. So I got out, and then 2 weeks later, they started to drop. Yeah, there's the profit take on the leg, just over 50% retracement, next leg up. So watch this high here. If you're short on this, which you may well be, obviously it's just a case of scaling in and then pulling back into that propulsion gap at some point. You're probably going to want to get up to there. I think this has probably got more room to go up to those highs. It will test that monthly high. We may get additional pressure coming out of that propulsion gap, which is where they started the bear move. That was the interest rate not changing on the New Zealand dollar again. So, we'll just wait and see when we get back to there, which will be back there potentially today. Could be back there today, but we should be testing this area by the end of this week. And obviously New Zealand dollar interest rates are coming out next week. If they do increase the interest rates, we're coming back down again. So, this is, again, a squeezy pair. All my testing has shown, with all RSI strategies that I've been testing, Aussie New Zealand is, again, another one of those, which is very, very, very erratic. So it's not the best pair in the world to trade. And again, I've had two major squeezes on Aussie New Zealand in the last 5 years, this one and another one. And it's always interest rates. So the other squeeze I had last year? Pretty sure. That one. So that was the other squeeze I got caught in, which was October, whenever that was, 22. So, you know, when you get an interest rate change and a fundamental shift, there were a couple of exits on this, but I didn't quite manage to get them. And I think I got out. I can't remember where I got out. Somewhere anyway, I got out. But obviously did undo it, as it always does. But yeah, it's about surviving it. So this one has the potential to go into longer term squeezes and into trends. Yeah. So the Swiss, the yen, and the Aussie, New Zealand, obviously, they do go into longer term trends. So you have to be a bit careful with them. Again, one to take out the portfolio if you're worried. There's plenty of other good stable pairs out there, and this isn't one of them. But it has a lot of big, strong movement, which obviously is good for making money out of. So, but right now, I think you'd be looking at a retest of the highs. It's too close to not want to go and test that level. And obviously there'll be limit orders triggering there. Whether or not it just flags and then breaks through will be dependent on the news on the New Zealand dollar next week. Aussie, US, again, trade it in either direction, don't care. As long as the US dollar goes up and down, which it does all the time, this is a money-making machine. So just keep getting in on extensions. Just working beautifully at the moment. Everything US dollar at the moment, and I think for the rest of this year, should be very, very easy to trade because the US is not going anywhere. It's just going up and down and up and down. Yeah. Very, very easy to trade all of those. So that's the euro. So we'll do the pound. We'll just catch up on the chat. Morning, George. Giving it one ADR before you add another position from an already extreme, do you find that it turns before you add or be offside? Does reducing the spacing help? Yeah, so reducing the spacing gets you into more risk. So the closer your positions are together, the more risk you'll have. In a squeeze, the more hurt you'll get. However, getting your spacing closer together keeps your average closer to price, which means you can get out easier. There's a win and a loss in everything. So, you know, in a move like this one on the pound odd that we're looking at here, for example, let's say you got into a long here and you didn't get out there. Yeah, ADR on this is 98. So from that entry, that is 98 pips, roughly. So that's an ADR. So let's say you got in somewhere around there. So you would have got in, you didn't get out with an ADR profit. You probably should have, you would have, but you didn't, let's say. So you've got to wait for price to get all the way down below that level to get a second entry. So you're sitting in it for 1, 2, 3, 4, 5, 6 days before you take your second. Your price then drops to there and you're out for that day. I mean, you're in profit now, aren't you? But look how long that's taken. If you'd have got in with half an ADR, you'd have taken a position there and you'd have taken a position there. You'd have been out 24 hours later. Yeah. But if it's squeezed against you, you've got twice the risk on by the time you get to one ADR. Yeah. So there's an advantage. And this is why I say in position trading, there is no right or wrong. There is different. What's your risk parameters? Do you hate being in drawdown? If you hate being in drawdown, space them far apart. The disadvantage to spacing your entries far apart is it's harder to get out because you need more movement in your direction because your average price will be further away from you. If you don't mind high risk, get in closer together, maybe half an ADR apart. And as long as the market is moving nicely, you'll get out very, very quick. But you'll need to take smaller profits because you've got higher risk. Again, there's no right way of doing it and no wrong way of doing it because unless you can predict the future and you know whether this price is going to be there tomorrow or there tomorrow, you have no idea where to put your next position. If this is going to go down for 3 weeks on the trot, you want to be spacing at one ADR apart, not half an ADR, because you'll be in twice as much risk and twice as much drawdown. If it's going to bounce at that low and then pop up to that high, you want to be scaling in a quarter of an ADR apart. So you've got a massive position on when it goes up to there and you can take a huge profit. but you haven't got a crystal ball. So you can't decide. You have to just pick one and stick with it. Yeah. And which is why I keep saying to everybody, go and do back testing, back test the differences. Let me just open that spreadsheet while we're talking about it. On the last round of testing that I've done on RSI2, because it shows you the difference. So this is using the Position Trader EA to do RSI2 testing. Yeah. So if you look at this, let me just pick a different one because that one's filtered. Pick US, that'll do. So if you look at this column here, yeah, that is add distance, which is the distance between trades. Yeah. So if I sort it by drawdown, smallest to largest, you'll see that the distance between trades is 1 or 0.75 all the time, 0.75 and 1. Yeah. So that gives you lower drawdown. So if you get in and you space your entries far apart, you've got less risk, less size. When things go wrong, they don't go as wrong. However, the profit is lower. Yeah. But the return on drawdown is also very high. If I now sort this by largest to smallest drawdown, yeah, the positions are half an ADR apart, a quarter of an ADR apart, virtually all the time, or 0.75. So getting in closer together will have more position size, which gives you more drawdown. The return on drawdown also drops. So it is better to space nicely and be in the trades for longer because it's safer, because we don't know what's happening in the future. But if you want to be aggressive, you can make some serious money, but you'll take some serious drawdown. So for me, it's better. I prefer to use something like a half to 3/4 of an ADR because I'm slightly aggressive. But if you want to be conservative, use, there's 1.5 ADR as well. But that's a little bit too far because don't forget, the reason we use ADR is because price moves an average daily range every day. So you need to be staying as close to that 1 ADR figure as you can with your entries and with your potential targets, because it can achieve it. 58% of the time, the market stays within its average daily range. So if you work within that average daily range, you'll have entry and exit opportunities on a regular basis. If you're outside of the average daily range, yeah, if that's where your target is at 125 ADR, the chances of you hitting that, 23%. Yeah, so 3/4 of the time, we're not going to get there. It makes it harder to get out of your positions. So, but you can do all this testing. Multipliers, look. Yeah, what gives you the biggest drawdown? Using martingale. I test all of this. I would never use it. But martingale hurts. It hurts. And it doesn't make as much profit. Look at it. The return on drawdown is 0.09, basically. You're making virtually nothing. You're risking 30 grand. It's just not worth doing. 1.25 is a fairly decent lot multiplier. Gives you a very good return, but also gives you high drawdown. But again, flick it back the other way. Turn that drawdown to lowest, which is what most of us want because we're trading portfolios. We want to keep all the drawdown as low as you can. Using a single multiplier to a 1.25 with a spacing of 1 ADR is brilliant. Return on drawdown is fantastic. The profit is fantastic. Your drawdown is nice and low. You're getting out quick. Yeah. It's just brilliant. So there isn't a right or a wrong. Yeah. There's 2,160 variations of all of this here. 1,911 of them are profitable. So it doesn't matter what you do, you will come out of it at the end all right. But we don't want to be all right. We want to make money. So you just got to pick something that is close to what you're comfortable with as a trader. Unfortunately, you're not going to know that. So you have to try things. And this is why in the bootcamp, I suggest you get in with an ADR apart because it's safe. It gives you time. Yeah. If you're getting close together, you're going to get burnt more, basically. But there isn't a right or wrong. How's FTMO going? Terrible. Terrible. I'm 1.8% down on the account now. Yeah, not working. It's having a bad run, basically. I was up 5%, on the 8% target. I still had about 3% of open drawdown though, so I was really up 2% on a close of positions. But yeah, just had a bad run. Look at RSI 2. Not working. But then again, I'll start a new evaluation another week and it will just go win, 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 pass within days. Yeah, this is why this is a great proving the point of why prop is such a massive con and people still haven't twigged it. Yeah. Making money in prop has nothing to do with a system, a strategy, or your skill as a trader. It has to do with the day you start it. Yeah. I started and I got up to 5%. Since I got up to 5%, the strategy's gone into drawdown. So I'm now sitting at 1.8% loss. Yeah. However, that can all turn into a nice win next week. And if the next week after that is a good week as well, I'll pass the evaluation. If the next week is a bad week, I'll fail the evaluation. The strategy has a long-term edge which produces 7R. But it has periods where it doesn't work. This is one of them. Not in my control, is it? I don't control when the market goes up and down. It does. So yeah, not going well at the moment. But you know, this is part of the game, isn't it? This is what the game is. It's gambling, isn't it? Prop. Morning, Abdi. Have you ever caught a wave on a squeeze and been on the right side? No, because I'm a mean reversion trader, not a trend trader. I've tried trend trading. I can't do it. But yeah, I mean, the problem, you know, everybody says stay with the trend. Yeah. The problem with that is all of this movement here is not trend. Yeah. So what is the part of the trend? That bit. So realistically, after you've identified the trend has started, you're going to get something like that out of it. You can get the same out of that, same movement there in mean reversion trading, but it does it 80% of the time, not 20. Yeah. So let's say, for example, you tried to get into the US dollar yen. So I don't know when you would get in. Let's say you got in there, right? So you've made losses here trying to short it. You've made losses here. You made a little gain here, which might have made some of that back. And then you tried to long it again on the pullback, but it went short. So you made some losses. So you flipped short and then it went up. So you made some losses. And then it went long and it came back down. So you broke even. So that period there, you're probably down 3, 5, 10% of your account. And now you finally get something that goes push, pull, push. Fantastic. I just made 6% back. Oh, no, sorry, I didn't. I got a break even on it. Oh, it's gone again. How do you ride that? You can't, because your entire focus on trend trading is making back all the losses when it was doing that. Not trending, so you're just losing all the time or breaking even all the time. When you finally get a trend that goes like this, you can't hold it, because if you've made a 6% loss on your account trying to get into a trend, by the time that thing's moved up 6%, you're crapping yourself because it's so massively extended. The next bear candle is you're going to poo your pants, because it's like, oh my God, if that disappears, I'm not going to get that money back. So I'll close that. I'm out, break even. It's taken me 3 months to get that back. That's trend trading. That's the real trend trading when you try and do it. Hideous. Everyone says, oh yeah, I caught that there. Like Bitcoin, yeah? All the Bitcoin millionaires, yeah? They did it by accident. They bought Bitcoin down here and it went parabolic, yeah? 25 quadrillion %, up, yeah? They forgot they even had Bitcoin. They opened their account one day and went, Jesus Christ, I just made 1.5 million pounds. They're not trading. That's luck. They're not trend trading Bitcoin, yeah? That is a beautiful trend. But in that trend, it also gave you a billion reasons to get out of the thing. And this is the problem with it. You will get scared all the time trying to trade trends. Yeah. So let's say you got a baseline breakout and you got in there, right? It pushed up, pushed up, pushed up. The first thing you do is you break even on it. Yeah. You're in, I don't know, 1R after 5 days, 1 and a bit R, 1.5R. Should you take that? No, because you need 15R in trend trading, don't you? 10, 7, 15. That's what they say. You need to get big risk reward. So it pushes up, pushes up, pushes up. You've got 2R on that now. Well done. It's pulled back for 3 days on the trot. Now you're back down to 1.5R. What do? Poo yourself. Take the money. Oof, that's taken a month. You can't ride these things. You will not hold them. I don't care who you are, what you say. You won't hold it. You will not hold that position. That massive bear candle followed by an inside bar, an inside bar, an inside bar, and a bear candle has scared the crap out of you for a week because it's been pushing for 2 weeks solid. And now for the last week, it's showing signs of reversing. You will get out. You will not hold through that for another month and then get on the next one. Just doesn't happen. In the courses, it does. In hindsight, it does. Hey, look, if you'd have just bought that, the reversal alert indicator, look at the reversal alert indicator in a trend. You bought that. Reversal alert. It's a horrible reversal alert, but you bought it and you're still in it. No, you're not. Because that would have taken you out with a trailing stop or a stop loss because that was a 1.5 ADR move to the downside. And if you're any intelligence whatsoever, you'll be trailing up to lock some profit in. You're out. Now you've got to try and get back in again. Yeah, but you're out. And this is the problem with trend trading as well. Let's say, for example, your risk reward is there. So there's your entry. There's your risk. Because they always tell you to put your risk below. Yeah. Your reward to get 1R is there. That's taken 2 weeks. 1R. You're looking for 15, don't forget. So you've got to try and get in with a really tight stop loss to make it worthwhile. So let's say you got in there with that stop. 1.5R after a week. I can get 1.5R in a day as a mean reversion trader because I'll scale in, and then it'll dump. I'm out. It's too easy. It doesn't work, does it? So no, I've never caught one. I've tried. But this is where these moving averages came from. The mentor that kind of turned my trading around introduced me to what he called the shadow. And it's basically his mentor said to him, I just use 2 moving averages. When it's above it, I buy it. And when it starts to go below it, I'll get out of my buy. So in this case, he'd have bought it here, but he'd have got out here, flipped short, stopped out, gone long, held it, got out there. There's your profit. Whoop-de-doo. Flipped short, stopped out, flipped long. There's your loss. That's just got rid of that profit. And we also made a loss there, don't forget, or a break even. So from getting into the trend there to getting out and flipping long here, we've made no money. Yeah, this is 2 months. We've made no money. We're now long. It's moving up, moving up, moving up. Intervention, intervention. If you'd have held it through it and held it through it and held it through it, you're still long there. Brilliant. 3 months. Well done. Have you held it through 3 months? How have you paid your mortgage for those 3 months? Because you can't use this money. You can't spend it. It's open P&L. Doesn't work. It works for banks. It works for institutions. It works for hedge funds. It works for anybody that's a long-term investor. Warren Buffett. We're not Warren Buffett. We're trying to squeeze money out of this thing by any shape or form. Holding thing. And you could say, all right, let's go down to the 5-minute chart and ride a trend on the 5-minute chart. Fine. But you're trying to enter on algorithmic chop that moves up and down 58% of the time with that much movement. Yeah. How did you make money that day? Didn't go anywhere. You can't catch a trend on something that goes up and down. Put a 20 or a 50 moving average on this thing and it will hit it regularly. But when do you get out? No, it's just too hard. So I've never caught one. I've tried to catch one, but I need to be paid. I can't pay myself when I've got to hold something forever. Yesterday explained away. Sorry, I missed your comment, Franco. France PMI out above forecast. Is it? Yeah, ever so slight. 0.2 percentile. It's not a lot. See, again, that's it's not good. That's down. Look, the German services and the composite is down, which is good, but the French is up. So again, we've got one down, one up. Cancels each other out. So is there any reason for the euro to change its interest rates in the near future? No, because PMI is not coming down. solidly, which means inflation won't come down solidly, which means interest rates can't come down. So we're back to neutral stance on the euro again. Very helpful, is it? I was a blackjack dealer. Martingale sucker move in every game. Yeah, it is. You can make martingale work on paper very, very nicely until it doesn't. And when it doesn't, it just bankrupts you. It doesn't work. But there is, and there is no problem using lot size scaling as long as you're doing drawdown control. Yeah. Because what happens is the longer you hold a position, the more losses you take, but the bigger your position size gets, the easier it is to make money. Yeah. So this is why we have these big paydays, because if we get into something that we have to hold for a few weeks and we're in 3 to 4 positions on it, when it actually goes, you've got a fairly decent lot size on it. So you can make some really good money, which pays for all the drawdown control you've done along the way because they were smaller positions. So you're drawing down on your small positions and you've got a big position to get the profit with. That's why it works. But you've got to sit through it. So this is why your lot size has got to be small to start with. Otherwise, it doesn't. We've just got an inside bar on the US yen. I've just completely forgotten about my stock index trades. I'm out of the DAX. So DAX out, clean break. Target was there. Oh, look at that for a TP. So target was 2R, pretty much on the spot. Second was a break-even exit there. So that's profit. We've got 500 drawdown to deal with on the FTSE, which is hedged. So just waiting for the FTSE to do something, basically. Yesterday, you explained a way to manage RSI2 trade by closing the last worst entry. Is there a way to do that with a position trader EA? Yeah, exactly that. That's what I've just gone through in that test. Yeah. So your exit. So drawdown start trigger is that column. Yeah. Which is in percentage. So in the position trader EA, your drawdown control settings here, set to true. Set the percentage of your account you want to start drawdown control at. So 1%. So if something goes into 1% of drawdown against you, yeah, close out 100% of the trade. Yeah. So instead of drawdown control in the position trader EA is designed to scale out of losing trades. So you take a percentage off. So you're gradually reducing size as the move goes against you. If you use 100%, it will just shut it. So it's equivalent to using a stop loss. So I'm saying if I get into 1% of loss on my account in a trade, shut it. Yeah. I have tested doing drawdown control on RSI2. It's not as good as just shutting it. Cut those losses. Because if RSI2 doesn't work, its strike rate is so high because it's playing on market movement up and down. But if it doesn't work, it tends to be because something's changed and it just gets embedded. If it gets embedded, you do not want to be continuously adding into positions because it could get embedded and stay embedded. Don't forget, unlike my normal position trading strategies, we're using relative strength index of 14 bars on an hourly chart or 21 bars on an hourly chart. So that's 3 days worth of relative strength. On a 4-hour chart, we're using 14 bars, which is a lot longer period. So on RSI2, you're literally measuring the last 2 days worth of movement. If we've had a news event which has sent it cascading down, yeah, there's a good chance it will go for a week, which means you're going to get loss, 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 loss. You need to take the loss. RSI2, I have done testing with percentage drawdown control. Oh, there you go. Actually, not that test. There's another test I did with percentage drawdown control. So I tested shutting 30%, 50%, 75%, and 100%. The thing that I was interested in was drawdown and return on drawdown. So it showed me that using 100% close had a much better impact on your drawdown. Your drawdown was much lower. The return on drawdown wasn't affected very much because we are getting out of our positions at a set target. So because we're getting out at a set target with effectively unlimited loss, aren't we? It doesn't happen that way, but effectively, because you're not using, if you don't use a stop loss, you're not limiting your downside, but you are limiting your upside. That doesn't normally work. It does work when you've got a strike rate of 80% plus. So it's better to take the hit, normal trading conditions, and do it that way than it is to use partial drawdown control. So that's how you do it in a position trader EA, is you just literally set the position trader EA to have 100% drawdown at whatever percent, 1%, 1.5%, whatever. You're risking over 1 ADR of movement. So if you put 1% in over 1 ADR of movement and you have 1% here, you are saying if it moves 1 ADR against me, shut the position. Yeah. And then the second position, if you're using a lot multiplier of 1.25, for example, you're saying if it moves 3/4 of an ADR against me, roughly 0.8 ADR or something like that, then shut it out again. Because you're increasing your lot size. Every time it pushes against you, the distance it pushes against you reduces. But obviously time carries on, which means it's more extended and the chance of the pullback is harder, faster. So all we're doing is we're playing the odds of the banks not continuing that move. That's what mean reversion is. We're saying we don't think you can push this any further. Mean reversion trading. Wayne, super helpful feedback. I find being no more than half an ADR from current price is what suits me indeed. I utilize stops. Yeah, so if you're utilizing stops, obviously you're going to hemorrhage cash. It's like death by 1,000 cuts, isn't it? So you need a higher strike rate. If you're using stop losses, you need high strike rate. And this is where I keep saying the whole risk reward thing doesn't work, because the risk reward model is based on you being able to achieve the reward. Most of the time, people's risk reward isn't achievable. So let's say you've got a system or a strategy where you want to get a 3R. If you were to get in on a break of that low, for example, with a stop above that high, that propulsion gap is 1R away. There's a very high probability they're going to rebuy the propulsion move, isn't it? So if you set a 2R target on it, even if it goes into profit, you'll find it very hard to achieve that. And what normal systems do is they will, when it goes 1R, they will then move stop loss to break even, protect the capital. It's a free trade, they'll tell you. No, what you're doing is you're telling the market to get you out at break even before it hits your target. Work again, does it? On paper, everything everybody tells you works. In reality, market movement means that it doesn't work most of the time. And because you're chasing losses all the time, you'll never hold the positions to the targets that you need to achieve anyway. So, morning, Grateful Buster. Martingale always leads to drink in my face. Security, yeah. Martingale does work in casinos if you can stop. That's the thing, isn't it? And that's what you can't do in a casino, because a casino plies you with alcohol. So you sit there, you start to lose, you do a bit of martingale, you start to win, your money back, they ply you with more alcohol, and you go, oh, this is going well. Then you lose a bit, and then you go martingale and make a bit more, give you some more alcohol. Then you just go, yeah, let's just keep doubling it. Oh, run out of money. Then you leave. Been there, done that. I've tried all sorts of blackjack systems. None of them work. This is why the house has an edge. I'm going to the casino on Saturday. Good luck, Danny. Every time I go into the casino, I walk in guaranteeing I'm going to lose whatever I've got. I usually take 100, 200 with me. Never expect to come out with it. Every now and again, I do come out with it, but I don't come out with much more than it. I think there's a couple of times I've come out with like 20 or 30 pound more than I've gone in with. Just a lucky run. And it's always on roulette, because roulette gives you those big winners. Luck. Again, it's all luck. It's gambling, isn't it? It's luck. Right, anyway, waffling. Pound odd. let's look at the pound pairs. So the pound is basically stuck at the moment looking for the interest rate drop. As you can see, pound odd gradually coming down, pound CAD down, pound Swiss obviously won't be, and pound yen won't be. But pound New Zealand not really going anywhere, but that's because weak New Zealand temporarily and the pound US slightly down. So the market is suppressing the pound at the moment because they are waiting for Bailey to announce the interest rate drop in August. So we haven't had him say it yet. It is coming in August. We just haven't had confirmation. So there's obviously no interest in longing it at the minute. Doesn't mean it won't go up. Obviously, intraday, it will. It will go up and it will go down. But overall, it's much more of a short than a long. So right now, I'm trading in both directions. But as you can see from the pound US chart here, I'm being very cautious with my exits. I'm taking what I can on longs, and I haven't actually managed to get into any shorts apart from that one there. And the only reason I didn't hold that one, again, going back to this psychology of holding positions, yeah, there was a short entry. I took it. I got out of the trade there because we had a parabolic news event. And I was like, this could go like that. So I closed it. That was the one that would have made me an absolute fortune. But I didn't because the market was telling me the opposite. Yeah, market's always going to continuously tell you the opposite. That's why we have red, green, red, green, red, green. Market's telling you you're wrong, you're right, you're wrong, you're right, you're wrong, you're right. How on earth are you meant to hold anything like that? But anyway, so at the moment, I'm trading in both directions on the pound. I will be setting short only on the EAs at some point, but I need confirmation basically from Bailey as to when that's going to happen. And I think that there's a good chance that we will do pretty much the same as the euro. However, our interest rates will be dictated by inflation, and inflation is at target. So we're the only country apart from the Swiss, which never really got out of inflation targets, but we're the only country apart from the Swiss that's hit its inflation target. GDP is going up at a rate of knots, which means this has got to come down fast. So there's a good chance the first one will be a 0.25. I think the market will assume that it's going to be a staggered drop, but I think there's a good chance that we might just have to do it a bit quicker than expected. And it all depends on whether that inflation figure goes down below 2% or bounces, which it probably will. But so right now, trade in either direction. It'll be like the euro. It'll probably come down very nice and orderly. Yeah. But it won't come down too far because we've still got other currencies which haven't dropped interest rates yet. So it should be very easy to trade in both directions. So at the moment, the bias on the pound is neutral, but it will be going bearish, and the US is neither. So pound US, no problem trading it in either direction at the moment. Pound CAD, sorry, that was pound odd, wasn't it? Which one I was on, but anyway, pound odd. Yeah, that was pound US. Pound odd bias will be that. So definitely want to be shorting pound odd ideally. So looking for ADR hits to the upside, RSI extensions, support rectangle, bounces, propulsion gap, bounces. Yeah, anything really shorts. Pound CAD bias on that one is going to be that and that. Shouldn't be a problem with trading it in either direction. Canadian dollar moves with the US. The US will move up and down a lot. So this one, I really wouldn't have too much trouble trading in both directions. However, obviously, we've got very much an unknown coming with what's happening with the government. We don't know what the impact is going to be on the pound with the government change. So at the moment, I've got short on that one from Monday. Didn't go anywhere yesterday, and we haven't gone anywhere so far today. Pound Swiss, we know, like that. Pound yen, like that. It's up to the yen and the Swiss to sort their lives out. Can't control that. Pound New Zealand, I've got short on as well at the moment, looking for a target in propulsion gap. That's from that entry. No, got out of that one. So that was that exit there. This one is a bit of a weird one. This, so I got into this on that RSI extension. Now on this chart, it's not showing an RSI extension. It just missed it. However, I got an entry on that. So the only thing I can think is that at that point, that candle took the RSI, literally must have just been to 70. And then we had a big move down quickly on the 5-minute chart, which just triggered an entry. But because obviously the position trader EA works on live RSI data, and this is candle close, that would have been up there, but actually closed below. So that's why that entry is there. So yeah, got into a short, but it was just a 70 extension. But it's not gone anywhere. New Zealand dollar's weak at the moment, weaker than it should be. However, interest rates are changing next week, so I suspect that will probably do that. So no problem shorting it. Targeting position, the propulsion gap at 125 ADR to the downside on that one. And pound US, don't mind trading in either direction. And this is very much the same as the euro US. Even though these will be bear, they're probably not going to come down very quick. And the US will just move up and down constantly on news anyway. So as long as it's moving up and down, it doesn't really matter. There's no directional bias on the US until next year. So it's sideways. So it will just keep moving on news, and it will keep undoing its moves on news. But you're safer with shorts. You'll get more movement with shorts than you will with longs, probably. New Zealand, weak at the minute. We're waiting for interest rate changes on this one. I've got longs on it, not worried about it. It's 150 ADR. I've done a little bit of drawdown control on it. It's not gone anywhere for a week. So I've just sitting in it already, waiting for something to happen. But hopefully some negative US news this afternoon will help the CAD come down as well. We might be able to get a bit of a push up. Just going to take us into that area. But waiting on the New Zealand interest rate decision. And more importantly, when we get the interest rate decision, it will be there. Sorry. The rate statement, which will tell us what their forward guidance is. So if they do not do the 5.75, which possibly they won't need to, the 5.75 will probably be forecast in the statement, which will make it bullish regardless. So could get a decent move on the New Zealand dollar. New Zealand dollar Swiss, you can see how weak the New Zealand dollar is. Yeah, we know how weak the Swiss is. The Swiss is being creamed by everything at the moment. The New Zealand dollar hasn't managed to do anything. Yeah, that's it. So it just shows you how weak this is at the moment, the New Zealand dollar. It will power up again, but we're just waiting for some news. New Zealand US, again, long on that one at the moment. No problem with longing or shorting New Zealand against the US dollar. If we get some weak US news, I'll be at target today, 175 ADR. 3 positions on it, just waiting. But as you can see, it's just stuck. Bit of news, stuck. Just stuck. Everything's just stuck. We're all stuck. Stuck. Always stuck. US dollar CAD got out of the shorts on that one yesterday. That was the RSI extension to the upside. Again, that just tapped that 70 level. Out of that one, long, short, long, short, long, short. Just keep getting in, long or short. Doesn't matter. They all work because this thing is just going sideways. Commodity pair against commodity pair, trade partner against trade partner, no bias, slightly short, probably going back to no bias. Yeah, so just ride the waves up and down. Getting short when it pushes, getting long when it drops. There we go. Happy Independence Day, down with the tyrants. That's tomorrow. So tomorrow, basically, I'm not on in the afternoon as usual. I'll be on tomorrow morning. Because it is bank holiday in the US. So, and it's the elections in the UK tomorrow. So, tomorrow morning is going to be just about sitting and watching, really. Analysis. I'll do some analysis of what we've had with the CPI figures for the Swiss because they come out at 7 o'clock tomorrow morning. 7:30, sorry. So we'll have a look at what's happened with that. And just get ready for that, really. So it's a case of with the pound, any exposure you've got on the pound if you've got profit. I've got shorts on the pound at the moment. So any profit I've got goes down there before the elections kick it off, basically. But the problem we've got at the moment is we don't know what impact it's going to have. It could have a very positive impact on the pound. It could have a very negative impact on the pound. So at the moment, as you can see, with most of the pound pairs, the market's really not interested because we don't know what's going to happen. We know that Labour are going to get in. I mean, it's very, 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 very unlikely that will happen. But we know what their spending commitments are. We know what their policies are. There shouldn't be any fundamental change in the pound's direction. But it only takes one talking head, look at what Theresa May did, to change that, doesn't it? Yeah. So Theresa May said, do you know what? We're going to change completely the way we do everything. Yeah. There's a new person in charge of finance coming up in the next couple of days. Could happen. We don't know. You just don't know. So the market is quite rightly sitting there cautious, very little movement. So I will do the same. I will try and get flat on the pound, really. At least possibly one, but I'll see where we are with P&Ls and stuff. I haven't got a lot of exposure. I've literally got one position on pound CAD, one position on pound New Zealand. So I'm covered on US and Australasian exposure against the pound. So what'll happen, what'll happen. But yeah, so we'll see what happens with those tomorrow. FTSE's well and truly stuck today as well. Again, tomorrow morning, be careful with the FTSE. It's polling day. What impact is that going to have on stocks? Are people going to just suddenly sell stocks and go into fear mode, liquidate stuff? We're going to get a drop in the FTSE tomorrow morning. No idea. You just have to be careful tomorrow because we don't know what's going to happen. So be aware. If in doubt, stay out. Yeah, you can always get in next week. A couple of days of ignoring and staying out of something are not a bad thing to do. Inside bar US dollar yen, look. And we're putting an inside bar on an inside bar. We've got 30 minutes to go on this candle. Symmetrical triangle formation, contraction. Before expansion comes contraction. So it's not really a symmetrical triangle, but it's a contraction. So yeah, potentially, if you look at a 15-minute chart, you've got a nice symmetrical triangle formation. So in the next half an hour or so, you're going to get to either that or you're going to get a move. So that's that big order I was talking about that came in. And they've actually, since that order's come in, look, buyers have tried to get back in control. We've had a reversal put in. So could potentially be a reversal underway. Japanese have just given up. Yeah. This is the thing that annoys me. It's just like, I think I'm more annoyed that I don't know. Yeah, it's just the fact that the yen has been taken away from me and I can't trade it. Because there is just no logic in what they're doing at the moment. They've reduced overseas bond purchase, which makes them weaker. They're not intervening, which makes them weaker. They're just weakening themselves. It's almost as if they're committing harikiri, isn't it? It's just, why? Do something about it. Right, you've got the power to do it. Do it. I don't know. But I do know that every time I've got into this, it's killed me. So I'm in it again. I'm starting to hemorrhage again. So this is definitely the nail in the coffin. It's almost, if I didn't do these live rooms, right, I would take all the yen pairs off of my market watch. Just wouldn't have them there because then I'm tempted to look at them. Same as oil. I haven't got oil on there. I haven't got gold on there because if they're there, I'll look at them. If I look at them, I'll be tempted. Take them off your charts. Get rid of them from your market watch. You won't look at them anymore. And then you won't care. The only thing that I would be interested in ever getting back in is when the Japanese start talking about intervention again. They did. I did. Turkish CPI's just come out as well. 71.6. Inflation. You think we've got it bad, right? We got up to 11%. 71.6 in Turkey. Good luck getting a mortgage. How did that function? Same as Mexico, isn't it? If you want to go and buy a cup of coffee, you have to take a rucksack full of notes because it cost 1.5 billion Mexican real to buy a cup of coffee. Maths, not their strongest point. So they started talking about it, didn't they, the Japanese? Next intervention. Now it's gone. So they've tempted me in again and again let me down. But I've only been in this for 168 candles. 1, 2, 3, 4, 5, 6, 7, 8 days. So there is no upside in sight. 161 to 163 was the forecast. We got a long way to go, 225 ADR till we hit 163. Still more up on it. But I'll wait and see what happens. If we get bullish news on the US this afternoon, it's going to make my mind up for me. And the EA will automatically start to scale out of this lot. So if we get negative news on the US today, I should be looking just to get out with a break even on it and try and get out. Just get out. Because I don't think they're going to press the button, are they? Just released their new toilets, Pap. Sorry, banknotes. Yeah. We can expect massive strength in the yen soon. I know, this is the stupid thing. And it's the way that they say we will continue to make money as long as there is demand for it. It's like as if printing money is useful in any way, shape, or form. It's just ridiculous. I don't know how they got themselves into it, but it just doesn't seem to be a way out of it. Ueda speaks on Japan's new banknotes. Where was it? They said something about, Kishida sees the economy moving into a new stage. Down the pan. Speaks on the new banknote issuance. Kishida says remains an important payment tool. Sorry, the most technologically advanced country in the world still uses paper money? It remains an important paper tool for the old people. Nobody below the age of 50 is using paper. I haven't used banknote. Every now and again, we have to go to the hairdressers. That is the only time I draw money out because the hairdresser does not take cards or I can't pay on my phone. Other than that, there is no currency. I don't buy coffee. I don't, go to a market. You don't use money, do you? No one uses money anymore. Japan, technologically advanced, make all the technology. Paper, important payment tool. What planet? Shows how backward it is in Japan at the moment. Yeah, they're more interested in saying things on Financial Juice about their new currency rather than them not going bankrupt, which is basically the way the yen is going. 38-year low. We will provide cash as long as needed. You're going to need a lot of it under your bed, but it's going to need to be dollars, not yen. Anyway, we will see. PMI forecasts for the UK have just come out. Up. Up. So that's inflationary numbers, which means that inflation might tick up, but even so, we're still at 2%. So not really any movement on the pound much on that at all. A little bit of an uptick on it. Right. That's all I've got for you today. Keeping cash is very important, about the only thing the Japanese have right at the moment. I don't know. Is it important to keep cash, though? Why do we need to keep cash? I can use this phone, and basically I walk into a shop, they say what the amount is, I put the phone on the desk. Why do you need notes? Why is it important? I don't see any use for it. As long as the currency's doing well, the economy's doing well, I don't care how I pay for stuff, as long as it's not in crypto. That is a waste of time. But anyway, that's another story. Right. What if you got debanked? Why would you get debanked? When's that ever happened? Ever. Or were homeless? Well, what's that got to do with anything? If you're homeless, you haven't got any money. You haven't got any money. In China, debanking happens. It might do. I don't know. I don't even know what debanking is. I've never heard the term. It's obviously not that important. I've been in the finance game for 15 years. I've never heard the term. So I can't really say it's high on my radar or anybody else's radar. So what are you saying, Thought Feeder? If you get debanked, you have to walk around with a backpack full of notes? Good luck with that if you live in London. That ain't going to be around for long, is it? What do you want in your backpack? Hello? I'll have that. And what they'll do is they'll put it straight into their bank account and spend it on their mobile. Or convert it into crypto and buy guns on the dark web. Homeless people do have money, cash, yeah. But they also have mobile phones. But if you haven't got a bank account, yeah, I mean, I don't know. What is it? 0.00001% of the population doesn't have a bank account? I have no idea. I don't know. But yeah, maybe we'll keep some of it for the homeless people. That's fine. Why, if you're homeless, you've obviously got cash, but you haven't got enough cash to buy a home. That's the whole problem, isn't it? Which is why you're homeless. So you obviously need some of it, I guess, printing money. I don't know. I've never even thought about it. You've started a conversation I've never been down the road of, so I don't really have any answers for that one. But I've never heard of it before. So if it happens a lot in China, I guess, yeah, the Chinese will maybe, that's maybe why Japan needs to keep its money, which is why that comment came out today from the BOJ. But they'll keep it as long as it's needed. What we need to do, this is what Elon Musk needs to sort out, the replicator. If you can create the replicator that they have in Star Trek, you can produce anything you need in your home, food, material goods, etc., etc. Therefore, there is no need for cash because you don't need money to buy the stuff that you want. Yeah. So if Elon can invent the replicator, that solves the entire world's financial problems. Apart from the people that have to make the replicators. But I suppose they'd make a big replicator, which would make replicators. Anyway, I'll leave you there on that thought. I'll be back tomorrow morning, 8 o'clock again. So, yeah, back at 8 o'clock. We'll do analysis of the Swiss and we'll look at the pound, what's going on there. Anything else you need, I'll be in Telegram or Discord, but don't expect a massive amount of movement today until we get the US news. And then obviously that will depend on the news. All right, so have a good one. Anything else you need, let me know. Otherwise, I will see you next time. Have a good day.